is it typical in M&A that you might change things later on in the offer? You make it first, especially if you already have enough information to make, you want to pay for it. But if you try to do something tricky, well, is the seller going to trust you? Well, the whole way they interact with their clients is all based on trust. So you're kind of out at that point.
I'm Brandon Poe, and this is the Accountant's Flight Plan podcast, where you can enjoy engaging conversations about mergers and acquisitions and accounting practice management. Listen in on strategies to build a more fun and valuable accounting firm. Welcome to the Accountant's Flight Plan podcast. I have a repeat guest today, and he is our market leader in Ontario, Darryl Boyd. Been on before. You might recognize Darryl's voice or his picture here, his face on the screen if you're watching. And we thought we would come together and chat about some things that are happening in the market today. And for those of you that don't know Darryl, he is a regional market leader based in Toronto, Ontario. And you've been with us. How long have you been? When did you start with Poe Group?
10 years, pretty much. Just about, I think. Yeah.
Yeah. And you have an interesting background. So you don't have a traditional accounting background by any means.
No.
And kind of project management, which actually fits in well with the line of work that we're in.
Yeah, that's true. It's interesting that how different occupations, a different experience in life kind of overlap, because when I was doing project management, a lot of the work I was doing they were long-term real estate deals, big land development deals. And you're working with the same kind of thing that we do, different kinds of scales, but you've got agreements, you've got these various parties, you've got due diligence at various levels. So there was a significant overlap there. And the people that I was working with at the time, they were just, it was exactly this kind of thing in a way. So that component of it, as far as the, figuring things out, negotiation wise, agreements, tweaking agreements, I learned very quickly that some people are very much sticklers with what their lawyer's language. And then there are other lawyers, even on these huge deals, they say, yeah, just kind of put something in there or describe it. And I was kind of surprised sometimes at how lawyer styles are really different. So that certainly carried over to what we do now, because that's what we're dealing with.
For sure. Yeah. We work with a lot of lawyers, that's for sure.
Yeah.
It's interesting because we started in the market in Toronto in, I think it was 2006.
Right.
And I developed that market and went up there a good bit. And finally, as we were growing, we met through an accountant that knew both of us. And it's been a great run, and a lot has changed. Definitely a lot has changed since 2006 when we came into the market. So a little story about how that happened. My very first listing in Toronto or in Canada was in Toronto. And I remember we had, I believe it was 63 inquiries on that firm.
Oh, wow.
And I only found like 2 people that were willing to not do an earnout deal. Mm-hmm. I mean, the earnouts were just that was how the market.
That was the norm.
Worked.
Yeah, for sure.
It was very much the norm. And I remember people on my team were saying, why don't you just, go with what's happening in the marketplace? And I thought, well, I know this works. And so I think we can make it work in Canada. And we did. And look at us now. I don't know. I mean, very few of our deals have earnouts.
Oh, yeah. And, I still get comments to this day, especially if it's an accountant that's been around for a while. They've heard our name. Maybe they know somebody that's worked with you or that did in the past in Ontario specifically or Atlantic Canada. And they'll comment on how they'll say you specifically, but how Poe Group Advisors changed the market with respect to this. So it's certainly something that for a lot of them, what sellers kind of wanted, to be able to not have maybe the level of risk they were having before with these earnouts. It's also helped them, I think, strategically to just say, hey, how do we really keep the clients? Like, let's actually think about how we strategize that, like with transition planning, as opposed to just saying, you know what, if the clients leave, the agreement will take care of it. Well, it's kind of like a lackadaisical approach to client service. So At a number of levels, I realize in some cases there may be exceptions, and the fit may not be for everyone. Like the big firms, for example, they still in Ontario, that's kind of their model. I always differentiate between people who approach it as part of their model, their acquisition strategy to have earnouts, and those who approach it as a risk mitigation strategy. If it's their overall strategy, usually you can't do anything about that because that's just the way they do things. But if somebody has an earnout or a holdback or something as a risk mitigation strategy, they're telling me, look, I see a particular risk here. Could we mitigate the risk in this way? But what's good is that those types of people usually are open to another option if it's there. Maybe
Right.
having really good transition planning, a way of following up, that can be a way of doing it. So it has been really interesting to see that change. I think we have a particular respect for each buyer to do things in their way, but also respecting the market to say, look, yeah, the number of times we've had a buyer miss out on, 2 or 3 listings only to realize, okay, you know what? I have to go in with this kind of offer. I have to go in strong because that's what everybody else
Yeah.
is doing. So I'd never
Right.
push somebody that way. That's their decision to make. But that's kind of the heart of an entrepreneur, wouldn't you say? Is to say, okay, is this the opportunity that I want to not miss out on?
Right. And that kind of, it's all about the fit, right? If
Yeah.
it's the right opportunity, if it truly is a good fit. And what I would consider from a buyer's point of view of what a good fit is a practice where you can be successful,
Mm-hmm.
and it's the work is sort of in your wheelhouse, if you will, and the maybe the style and philosophies are similar from the seller to the buyer.
Mm-hmm.
And I mean, obviously, it's there's a lot of factors that go into fit,
Yeah.
but I find that what is interesting too is if the buyer and seller can just suspend the idea of how the deal is going to be structured and how it's going to be how much it's going to be sold for, and just focus on, hey, is this going to be successful in terms of the handoff?
Yeah.
Is
Yeah.
Are the staff and the clients going to be well served by this transaction?
Mm-hmm.
Then okay, let's figure out how to make the transaction work.
Right. Yeah. It's funny as you're talking, I do remember something from this would have been maybe 4 years ago. It was a buyer that was really interesting, great personality. We talked quite a lot, but they were staunchly earnout in how they were going to acquire. They acquired at least a couple firms privately before. But we enjoy talking to people, so we'd have conversations. And it might have been 5 years ago, whatever it was, the perfect firm came up for this buyer. It was the kind of firm, because they were even familiar with this firm. They knew who it was. And I remember that day talking to them saying, you know what? Usually I would take this route, but with this firm, I risk more by not buying it than any possibility of what could happen. They were just so confident. They also knew something of the character of the seller. It was location wise, it was, I don't know, it's a few kilometers away from their office. So sometimes it was interesting to see the shift. And I respect that. He had a certain
Yeah.
way of buying things here, but for this firm, and that's what ended up happening. It was a really good transaction. Things worked really well. There were even little things that came up along the way. There was, for example, some question of severance that was kind of the buyer and the seller were working through. But what made it work was that fit that you're talking about, because it was prior. Both parties knew this is really good. If there's any way that we can make this happen, then let's do it. So they weren't, they were still going into it with eyes wide open, but it worked well. So, and I
Yeah.
guess maybe it's hard for people to see until they really, like for this person, they had to be in it before they knew that that's something they could do. And
Yeah.
yeah,
Yeah. And it protects the legacy for the seller. The seller wants to feel good about, the practice going to the right person. Obviously, the buyers wants to be successful for very obvious reasons.
hmm
So it's exciting when you see kind of those matches work out just so.
yeah.
And
Do you think it's changed some in the market from a what do people don't usually associate M&A with personal. You associate M&A with hard negotiating and people trying to get what they want, and it hasn't been my experience with this, and you having done this for longer both in the US and Canada. I'm curious as to whether you've seen any changes, either yourself or even with overall M&A, towards more of a personal way of dealing with things in some cases. I don't know.
I think it varies. I think the market, you know, private equity comes up a lot in discussions that I've had recently.
Mm-hmm.
As you well know, there's been quite the consolidation period in the United States with private equity, and I want to talk to you about what you're seeing in Canada around that. But
Right.
I do think um, private equity buyers in general are a little, they're cut differently from your traditional CPA buyer.
Mm-hmm.
Um, and some of them are, I think private equity has a little bit of a tarnished reputation to a lot of accountants,
Mm.
and some of it's earned. But I do believe there are some very good firms that are out there consolidating, and they truly care about the integration of the firms that they're acquiring, and they're thoughtful in how they're combining these cultures, how they're serving the clients, and the um, developing a team culture that
Mm-hmm.
is good for the staff, so they want to stay there and they have opportunity. And um, but I do find that there are more buyers in the marketplace now that are just, I call them spreadsheet managers. They're they're just looking at the numbers, and that's bottom line. That's kind of what they care about, for the most part. That's um, and sometimes it's not always easy to tell who those people are. Um,
Yeah. Well, especially sometimes with private equity, because those who might be at the, making the first contact with the seller may not be the ones making the decisions. Um,
exactly.
and um, what is interesting though is I agree with you. I think that the whether it's a CPA firm, a bookkeeping firm, accounting and tax firm, there's a high trust with them and their clients. And that's not easy for them to let go of in the positive sense. I mean, they want to retire or sell, whatever it is. The intention's correct. But um, I mean, I think it's almost, if you did have a private equity firm and hey, they're like any other buyer, there's good, bad, and ugly, I'm sure. But it's almost easy, I think. In other words, it's easy to make the wrong mistakes and it's very easy to do things right. If you can get aligned with understanding what that trust is, then so for example, even the way that you make an offer, is it typical in M&A that you might change things later on in the offer? You make it first, especially if you already have enough information to make, you want to pay for it. But if you try to do something tricky, well, is the seller going to trust you? Well, the whole way they interact with their clients is all based on trust. So you're kind of out at that point. And I think a good buyer, good private equity, whatever it happens to be, them embracing, okay, we have to be able to go through our spreadsheets, as you say, and make sure that this works for us, of course. But let's deal with it in a different kind of way. So I say that not to say that, what we might think of as typical M&A, of course, it has its place. In this particular industry, though, if you're a buyer, it's relatively easy to do well, I think, because you just have to be sincere. And if your business model doesn't align with sincerity, okay, this just might not be a good industry for you.
Yeah. And I think too, I think there are sellers that fit in the category of they really don't care about the legacy of their firm.
Yeah.
And they don't care what, they just want their money and they want to be able to exit, and they don't really care what happens. Those people do exist in the marketplace.
Yeah.
I think, it's interesting because we had a conversation, our team, Bailey, who's our marketing director, and we were sort of redefining or re-examining the definition of our ideal client.
Mm-hmm.
And one thing we realized is we really want clients, sellers, and buyers. But we were having a discussion about people who wanted to sell, who have something else that they want to do after the sale.
Mm-hmm.
They have a fairly clear vision of what's next. They don't have to. It doesn't have to be a perfect vision, but either they have a new opportunity, that is exciting them and pulling them out of the practice, or they want to retire. Maybe it's an early retirement. I've had people in their 50s that want early retirement, or they want to substantially slow down and they don't want to own a business anymore.
Mm-hmm.
But they're clear about what's next. They're not just, hey, if you can get me this much money, I'm out. Because that just becomes a difficult situation often, because we find that they don't always want to. They don't always sell. Even if you get them their number, they're like, well, I don't know. I don't know if I'm really ready. So that was
and the
one
buyer
thing.
feels that too, I think.
Yes, the buyer absolutely feels that.
Yeah.
And the other thing is we like clients who care about their staff and their clients. That's our ideal market.
Yeah.
And if you really want to drill down, we want them to have a good firm culture as well, so that hopefully we can help them match someone who's going to, care about that culture and continue it. Obviously, they'll alter it in some way, because no one's going to do exactly what the seller is planning to do. But
well, yeah, of course. But yeah. And I remember a discussion I had this summer. It was the summer or the spring. We don't take all listings, especially if we see that something isn't maybe the right fit just for us. By the way, I always do. I don't know if you do this, but in my discussions with sellers, I even tell them, look, if you're going to sell, you're going through a big life stage here. So it's even important that you gel correctly with our team and vice versa, because we're going to be working together through, not the difficult times, but when things come up, they have to know that we're trusting each other, we're working hard for them, and that we're aligned. So there's this one conversation where I had, and I ended up not taking the listing because and I know they were just trying to maximize the price of their firm, and we do that, but it was just, they never had any mention of staff, no mention of, I want to make sure that legacy stays on or anything like that. And the impression I kept getting was, we're just in it for the money. And I feared that that's what would communicate to the buyer. And I think one thing that you've done over the years, Brandon, here in Ontario, and that I've continued, is the reason why people will pay cash. There are many reasons, but for practice is because they're trusting the market that we've created, kind of thing. They're trusting that we're taking on the sellers that really genuinely want to make that buyer successful. And if I got the sense that they weren't, then I don't want to have that hurt everybody else afterwards. So we're going to try very hard for our seller, and I don't see that these things work against each other. Of course, we're going to try very hard. But and I think that sort of respect of saying, okay, I respect that one seller may have particular direction they want to head with their listing and how they're doing things. And that's fine. If we're not a fit together, then that's okay. It's funny how this word fit comes up so much, right?
I know.
Yeah.
Well, I do think it's a natural, I do believe, like, when people are starting to think about selling, they're not committed to selling, they get curious about, okay, what's my business worth? And that's perfectly natural, and that's healthy. And it's to be inquisitive and to try to go get information. And we're happy to have those conversations with people, right? But, the amount typically is not the deciding factor of when they want to exit, right? That's usually not the primary driver. And obviously people want to get the most money. But anyway, what I'm getting at is, like, if you're curious and you're thinking about selling, we love to talk to people and help them plan and help them kind of think through, because it is often, if someone's retiring, that is a major life change. So it's a big decision, is my point.
Yeah. It's been, I've had a lot of conversations this year that have been, they started as, hey, I'd like to sell. And as we worked on the firm a little bit to say, getting information on what it looked like, we always, I remember years ago, Brandon, that you had told me, you know what, we want to make sure that somebody's good and ready to sell. We never push people towards selling. And I've always taken that to heart because we just don't do that. So I'm always first saying, okay, what's the reason for it? And a lot of people are just tired. The way they've
Yeah.
been running their firm, they're just exhausted. And this one person that I talked to this summer, I've known them for probably 3, maybe 4 years now. And the conversation this year was, look, Darryl, I feel like I got to apologize because I don't know if I'm ready to sell now because the firm's working so well. What had happened is we had talked, whatever it was, 3 or 4 years ago, we worked on the firm. They weren't charging enough and they were
Yeah.
working way too much, some of the typical things that we see. So we worked through some of those things. They knew that I wasn't pressuring them to list, but now they've got options. They know that tomorrow, if they wanted to, they could sell and they do extremely well with their firm. But it's working well for them. And that's okay, honestly. And I say this honestly, that's totally fine with me because I feel like we're there to be able to provide that. And you know what? I had another person a few years back. They had a 5-year plan, but then one day they called me and it became a 2-year plan. They said, no, we've been doing this for 2 years of our 5 years and we want to go now. So I think it's recognizing that life just looks different for people. And part of our job is to help them prepare their firm for a sale. And if that's over 2 weeks and they're suddenly want to list, okay, that's great. But other people, they're ready to sell. They thought they were, but then they just needed to fix up the firm. I mean, I know that's a big part of APA. Our coaching program is doing exactly that.
Yeah. Yeah. It's fascinating. It's, and it's wild because neither you nor I have ever retired, so we don't really understand what that feels like. But
yeah,
certainly gone through it with a lot of clients.
We have a fast-growing CPA firm for sale based in South Carolina. The owner is willing to stay on for 10 plus years to run and grow the firm, which services high net worth clients. The asking price is $10 million and the listing ID is SC2038. Visit PoeGroupAdvisors.com to learn more.
Well, I know you recently spoke to a group of firm owners that had probably most of them were multi-partner firms.
Mm-hmm.
I believe you said revenue in the $10 million range.
Right.
And are you starting to see in Canada some of the private equity outreach occurring? Are you starting to see firms getting reached out to by private equity to purchase?
They are. I think what's been common even over the past few years is a combination of either private equity firms or just very entrepreneurial CPA firms or bookkeeping firms or whatever they happen to be saying, hey, we want to grow. We're going to reach out to firms. It can be a little flattering when somebody knocks on your door and says that, hey, we'd like to acquire you. In the conversations I've had, the ones that have progressed a little bit further, often the comments are that they changed their offer from what they were offering up front, either as a tactic or they offered something, but they just didn't know. I mean, they don't know enough about this business. It's different because when we list something, we've got a profile. So there's something there for the buyer. Different type of approaches, different people. We have had, so far in Canada, I would say more often than not, even if we're like, let's say a seller is very open for who their buyer is. Their buyer could be, let's say if it's a CPA firm, it could be a CPA firm, or they could be open to private equity. Now, there is a whole ownership thing, which we could talk about sometime, but there has to be a way of doing that because in Ontario, at least, you can't own a firm unless there's 100% CPA ownership. And so there are ways that they do it. Think of it as private equity backed, as it were. So another firm coming in. But more often than not, the CPA firm ends up choosing another CPA firm as their buyer if they're listing through us and not a PE firm because they think that's the best fit. Now, either the right kind of fits haven't come along with PE or there were good PE fits, but it has to go to one person. It's kind of like with just normal buyers. We often have the sellers say, look, there are such good buyers here. I've got 5. It really could be any one of them. They're all really good. So I think as we're talking to PE more and more, I think the ones that are sincere, that really want to be able to do this, they're listening to us about how they present themselves. I certainly have a lot of sellers that are quite flexible. So you know how we said a little bit ago that PE sometimes has a bad reputation. It may be, but I think many of these accountants have worked with their own clients selling and buying businesses. I mean, so they kind of speak this language and they know they're good and bad companies just across the board. So it will be really interesting to see what happens over the next couple of years. I remember you saying once that I think private equity recognizes opportunities in this industry that the industry itself may not recognize. And I think that's exciting, actually, because I think people often undervalue what's possible with CPA firms, accounting firms as businesses. There's a lot that could be said on that, but
you have been saying that for many years before private equity even thought about acquiring accounting practices. You've said, like, gosh, there's so much opportunity in these practices. And we see it with our academy. You're exactly right. Well, what were some of the themes, because I feel like you gave this kind of smaller presentation. It was a small number of firms. I think you said 10 firms or so.
Oh, yes. Getting back to that. Yeah. So that was specifically what they were wrestling with is succession planning. And what they originally approached us about was what we call internal succession. So not listing the firm for sale and having a successor in that way, but either training up staff to be able to take over the firm or hiring staff for a position or buying in as a partner with the expectation that they'll be taking over. Of course, these are multi-partner firms. But they were having problems. They were having problems with somebody coming up in the firm who technically was a great accountant, but they wouldn't be a good face for the firm. Not that they're a bad person. They themselves wouldn't want to be. Like, I just want to do the work. I don't want to bring the work in. And so what was interesting in the conversation is because of our experience in selling firms, there is a significant overlap in what works and what doesn't. When you have somebody they're looking to sell and they say, oh, well, I'd really rather just kind of bring somebody in, train them up for a while, and then they could take over. Well, this happens regularly with you and I. And what happens? Well, does it work? Sometimes it does. Sometimes the person either doesn't have the money, or more often than not, with me, was if they change their minds at the end of the day.
Right.
So these firms, these larger firms, were experiencing the same thing. So we had a really good discussion of just saying, look, what are the things to look for when somebody comes in? How do you determine who's going to be a good partner to take over the firm? And also, they had no idea the market was as strong as it is. They just had not considered that as a possibility. It was just, that's all they imagined, was their partnership just continuing on in that way. And I think that's something that's really changing. When a seller says, who's buying out there? Well, that's a long conversation because it varies greatly. There are very good, like here in Toronto, there are some exceptional firms run by, like, I'll tell somebody, like, off the top of my head, I know one that's about somewhere between 6 to 10 million right now. One owner running this firm, and they say, well, how can one owner run that firm? Who are the other partners? Well, there aren't partners. I mean, it's a corporate structure. They have client managers, and some accountants they can't, if they're a partnership, they can't imagine being bought by anybody else than another partnership. And so we do a lot of education. We just say these other things are out there. They're true. If you have a firm and say it's 10 million is the case with some of these, if selling is a better option, are there really good buyers or buyer teams, as it were, that could acquire you? Yes, I have no doubt in my mind, because we're talking to them all the time. But for them to get their head wrapped around that, might mean multiple conversations. So needless to say, there were a lot of questions that day. It was a really good discussion. And I think it will be, and it was interesting as I talked to them, some were interested on the selling side and others thinking, you know what? Yeah, I see what you're talking about with opportunities here. Maybe we should be thinking about acquiring. So, interesting discussion for sure.
Yeah. Talking about variability of firms, like that is one thing that I am still astonished by. We see so much variability in how profitable they are, how many hours the owners work, how they structure their teams, how they structure their leadership teams. It's really all over the place. And it's I feel like it's a privilege for us to be able to see that, because we get to see the P&Ls too, which not too many people see, the actual P&Ls and see what works. But were there any other surprises in this recent meeting, or any just they don't understand how viable the market is. I believe that's definitely true. We were in a team meeting yesterday, and one of the things that we're thinking about, how do we improve client service? We do this every year, right? How do we even make it even better next year? And one of the things is we're going to start giving actual data, like, okay, this is how many inquiries you've had on your firm, because most of our clients, we're filtering some of those, so they're not seeing all of the inquiries. And I think a lot of our sellers are shocked that, of just the sheer number of inquiries they have on their deals.
Honestly, yeah, I still think, honestly, Brandon, the biggest thing is just making assumptions. We have actually a webinar that's going to be coming up in January. Lisa, so my colleague in the US, we're going to be talking about this, helping people to understand how these deals actually end up working out. A lot of times it's just a seller getting their mind wrapped around it and just not believing what they've been told by other people. Because, and I say this to sellers often, it's not that, like, if your colleague says, you know what, you're going to have to stay around for 3 years for the transition. That's simply not true. It could be true in a particular instance, but probably not through selling through us. You're going to have to take a 3-year earnout. The person who's telling them that is probably right in their own case, a private deal or selling to a regional firm, something like that. But in our case, in this market, whatever you'd call it, the public market firms or something like that, when we're listing them, what's true of this particular market and those types of transactions are just not typical with us. And so I'm in this position of saying, look, I'm not saying your colleague was wrong when they're telling you that. I always just say it this way. They were incorrect in this case. They were right in their case. So the things that we just find are typical in our industry, a lot of times people get, it takes them a bit to get their mind wrapped around.
And there's, talking about variability, there's also variability in locations and different markets. Like your Toronto market is very different from our Los Angeles market. The Los Angeles market is very different from, say the Charleston, South Carolina market. There's different dynamics at play. There are different numbers of buyers in each one of those cases. And that's something that, on the topic of practice valuation, that's the lens that we look through, is how many potential buyers are there for this practice? Because ultimately that is what's going to drive the market around that particular firm. But then you've got variability within those markets, right? So, a $1 million firm might fetch a different multiple than a $3 million firm. Same market, but not the same market.
Yeah.
So there's so much variability.
And I think when you're talking to somebody who, like yourself, who says that and just admits that that's the case, you're talking to a person who has some expertise or who realizes this. Because sometimes people just say equivocally, okay, here's the way it is. When somebody says that, and there's usually no nuancing of it in any way, sorry to put this bluntly, but they probably don't know what they're talking about, because life just isn't like that. It certainly isn't like that with practices. I don't say that. Do I say all practices sell for cash? Sure, most of them do, but what are the exceptions? Have I had a seller have, say 5, well, let me think here, something recently, 5 different offers, but they picked the offer that wasn't the highest price offer just because they like the fit the best. That's their prerogative as a seller to choose that. So, but as for my data on what the offers could look like, yes, the others were cash offers as well. So for what each seller wants, it depends. So I say it depends a lot, because it just does. It depends on the situation, the fit. And I'm okay with that. So I like to be able to say, hey, there are complexities to life. I want to respect where a buyer's coming from, where a seller's coming from, and say, you know what, it depends. And let's have that kind of conversation. But when somebody comes along and says, you know what, my lawyer told me, sorry, I'm laughing because I wonder where they get this data. I just had it recently. My lawyer told me that 25% of the clients are going to leave the first year. Well, did you ask them where they got this data? Well, no. So, we sell more firms than anybody in Canada. And, where did this come from? Where is this data? They didn't ask us for it.
Yeah.
So people just
I
say
know.
things sometime, and then people just believe them. And I'm saying, well, let's kind of work through that. And hey, if it was the kind of transaction where you closed and you just sent a letter out to everybody without doing any planning, yeah, I can understand the 25% left because you screwed it up. Sorry, that's just
Right.
not the way.
Yeah.
And I say that as a client. Like
Yeah.
part of the huge benefit, I've got this major benefit in or competitive advantage in this business because I think like a client. And it really, really helps. Sometimes CPAs and accountants don't think like their own clients. So if I got a letter in the mail that said that this transition is happening, well, how do you know how I feel about it? You can't know. Maybe, but if you call me, well, then at least you know how I'm interacting with you on the phone. So I don't
Yeah.
know. I think it's almost this self-fulfilling prophecy sometimes about how deals can go bad because if you're going about it in the wrong way, if the fit's bad, if you don't do your transition planning, then yeah, you're
Yeah.
probably going to have poor results. Now, that doesn't guarantee that you're going to have absolutely the best results if those things are in place, but you're going to give yourself your best possible chance to.
Yeah.
So it's
Yeah.
yeah.
Yeah. It's a complicated thing, and but it's interesting too, though, isn't it? It's challenging,
Mhm.
interesting work.
And it's as
Um,
different as each buyer and seller. It just
well,
because it's a
I
people
want to talk.
business.
I want to talk a little bit of kind of like some of the cross border, like what it's like for us to work across the border, and how we collaborate with our teams that are working in different countries. And we talked about a lot of variability on the practice level, but I actually find that doing the work is incredibly similar, whether you're selling a deal in Canada or the US. Obviously, there's some difference, there's some nuance,
Mm-hmm.
but overall, we're dealing with somewhat the same psychology, the same basic issues, and um, yeah. What are
I
your opinion?
agree. Yeah, I think the basics there of when I think of I always have this little picture in my head of this industry of whether it's CPAs, also bookkeeping, accountants, anybody who's taking care of that financial management for their clients. And there are very few occupations that you can be interacting with your clients, so as an accountant to their clients, at a very sensitive level of human behavior. So that's finances. People talk about all kinds of things and they won't talk about their money, but they do with their accountant. And I will say, whether it's Canada or the US, accountants do tend to recognize that. And so when they tell us that, when they say, you know what, I don't see how I can hand this over to another buyer because my clients, they trust me, they know me so well. What I hear them saying is simply that. They're just saying this is a trust business. Now, they don't know who the buyers are that we're bringing yet. When they see them and know the buyers think the same way, it'll be fine. But I totally respect where they're coming from. And honestly, it's a bit of a treat, I find, in this particular industry, because almost across the board, we know, let's say there's a general business broker out there and they're selling a, electrical parts manufacturer. Well, what does fit look like for that? I mean, you could have somebody that's not really a great person, doesn't really respect their clients, but they run a good business. In this case, you almost can't have that, So I do find that in either country, there is this idea of we're given a trust from our clients to take care of them. And that's why it
Right.
it resonates very well with, when somebody says, look, I don't see how I could hand this over to somebody else. To me, that actually is initially a positive thing because I know I'm dealing with someone that respects their clients. So
That cares. Somebody
they
that
care.
cares.
Yeah, they actually really do. And I think
Yeah.
that's why they get nervous sometimes about, oh, how do I sell this? Or maybe I need to have a long transition because of, whatever it happens
Mm-hmm.
to be. Now that isn't always necessarily the case and in the way that we would do things, but it's coming from the right motivation. I think it
Yeah.
makes the wrong assumptions, but it's coming from the right motivation. I've only just thought of that now, but I think that would be the way
Yeah.
I'd describe it.
I heard of I don't know where this came from, but people don't care how much you know until they know how much you care.
Mm-hmm.
Yeah. So sort of a little way to remember that.
Well, yeah, that's true. Be true of
Yeah.
me for sure. Yeah. Um,
Well, we're wrapping up here, and when we were kind of prior to hitting the record button today, you were sharing that you had met with some past clients who'd sold, and you had some really good feedback, and just kind of catching up with them in life. And it was funny today. I was going through some old files. We were throwing out some things and for the shred, to shred old client files, and it's almost like you really do remember the clients years and years later that you work with on these deals. So, do you have any? You want to share a couple of those recent meetings you had?
Well, yeah, it's interesting that you brought that up as we were talking about it. It does give you a great sense of satisfaction for what you're doing and how many people it affects. Because it's not just the seller. It's the seller and their spouse. It's the seller and the buyer. It's the staff. And then the clients, all of those clients that are depending on them. So I take that seriously. I mean, we can't keep it all in our heads at one point, but in this recent dinner that I was talking to you about, it was basically 3 sellers that had all sold through me over a period of probably 7 years, I would say. And I'm sitting there, and they had all known each other in different ways, either whether it was school or working together. And
small world kind of thing.
Yeah, that kind of thing. And it's kind of hitting you what's really gone on. And they came in different ways. One of them just embraced full retirement right away. The other one retired technically for a time, and then they started doing some contract work for their buyer. Sometimes people do different things, but it was, I guess, it just that sense of satisfaction. I suppose I'd say pride in a positive sense of the word as well. I suppose, Brandon, years ago when we first talked, I think it was probably in the early conversations that we had that it hit me how personal of a business this is, which is really interesting because you wouldn't think of M&A in this instance maybe being that way. It certainly is for me. So that's what kind of hit me. And so when I'm talking to sellers from years back, and we follow up, some people I've followed up. There's one in particular, the CPA, who he's actually passed away since, and I still talk to one member of their family, just following up. So it's interesting to see how these relationships continue. It's
good stuff. Well, Darryl, thanks for coming back on. And
great. Thanks for having me.
I'm sure we'll probably do this again, but great to catch up and talk about some of the new stuff happening in the market. So hope our listeners, I'm sure they got lots of value. Thanks for coming on.
Yeah, thank you.
Thanks for listening to the Accountant's Flight Plan podcast. You can keep the momentum going by subscribing and sharing your thoughts with us. Visit our website at poegroupadvisors.com for more resources, and tune in next time for more exciting conversations like this one.
This podcast was produced and edited by Liesl Epps of Poe Group Advisors. Thanks for listening.